The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start the show like we usually do, taking a look at the DAX, and as you can see, we have been heading down. This is not a surprise. You can see we've had lower highs and some nice retracements back to nice fib levels. If we take a look at the FTSE, it is also showing some weakness here. We had the retracement up to the 50% level. The ABCD structure on this, folks, measures down to about 6,900, so this is just beginning to start. I'm not sure what's going to be happening with the market today. We'll go into that a little bit later because, you know, we do have some things about the bearishness of the market that we need to talk about, but we also need to talk about a few other things. Let's talk a little bit about a stock that's in the news that we've been looking at for a very, very long time, and that is Deutsche Bank. Something big is happening in Deutsche Bank. The news is this morning that Deutsche Bank is going to be delisted on the European stock index. That's like taking it out of the Dow Jones Industrial Average. Folks, this is the largest bank in Europe. And, no, wait, I'm not sure of that. I know it's the largest bank in Germany, but the largest bank in, I think it is, but I'll stand corrected on that one easily. It can't be, well, the six largest banks are all in China, so it's got to be up there. I know it's in the top 10, but that's a big thing, I believe. And, you know, it looks like Lehman Brothers more and more as we look at some of these things as we go through the morning here. The other thing that we have going on, folks, is we have a hurricane. Hurricane Gordon is in the south of Florida, heading up that way, and it's not a hurricane yet, but they think they're going to make it a hurricane. We're going to have hopefully Kyle Cooper on either Wednesday or Friday. Norm Winsky will be on Thursday, and we'll see if we can get Kyle Cooper on from Houston Energy, because he's on Bloomberg and CNBC all the time talking about energy, and especially with how it relates to hurricanes. And we're seeing some, you know, pretty big moves here in some of these markets this morning here, especially for heating oil. Heating oil has gone up and made new contract highs in the spot month, which is I think pretty important. So we need to, you know, sort of keep an eye on that. But it's still an interesting one because it's not really classified as a hurricane as of yet. Boy, there's a lot of stuff to talk about today. The one thing that I want to bring to your attention, folks, is this chart right here. This is the New York stock. I don't want to keep beating this old drum that I got over here on the desk. You can hear it beating over here all the time. It's an old Indian drum from one of the chiefs of the Cherokee Nation that I traded hemp for a few years ago. We made a few bucks in hemp, and we were trading October hemp. Anyway, the main thing is that this chart, as you can see, shows the difference between the New York Stock Exchange Index and the NASDAQ. That's the main thing that I wanted to show you. Now, what I'd like to do, and that's what we're going to do, is we're going to go back in time to the period of 2007. This is when Mr. Bernanke came out and said everything was okay in October of that year. And if you notice that Gartley sell signal that you have there on the weekly chart, if you notice the bottom down there at the 3 drive to a bottom pattern there on March the 9th of 2009. But let's take a look at what's happening right now in the New York Stock Exchange Index, and you're going to see, just a minute, boys and girls. That's not what I wanted. Hold on. Someone's in the wrong neighborhood. Here we go. That you can see here, we're seeing the same Gartley signal that we saw back at that level. This time, of course, we're having the NASDAQ is going wacko to the upside. In 2007, that was not the case, so keep an eye on that. I mentioned in the hold on, let's move on to a couple other things here that we need to cover. You're asking so many questions this morning, folks. I can't hit them all at once. Let's talk just a little bit about taking profits, okay? When you put a trade on, it doesn't make any difference whether it's a 15-minute, an hourly, or daily chart. That's how you should value what you're looking at. If you're putting the trade on a daily chart, take your profit on the daily chart. If you put the trade on a 15-minute, take it off on the 15-minute. That's really what you need to do. So make sure that when you do that, that you've got some reasoning for it. Now, you don't know whether it's going to make the 61% retracement, the 78% retracement, 1-to-1, 2-to-1, 3-to-1. You absolutely never know that. But the market sometimes will give you a big hint. Folks, if you put a trade on and the market gives you a big profit right away, it is telling you, hang in there. I'm going to give you more. That's basically it. If you shorted stock index futures on Friday, we had a little bit of a rally last night and now they're breaking down again. Hang on. They want to give you some more. So just keep in mind that that's the thing that you want to look for. Watch how quickly the market works in your favor. If you're not profitable after the first hour or two, you've probably done something wrong with the pattern, or the pattern's just not working. So that's a key to, to be, what you're looking at. Let's just take a look here at this E-mini S&P here for an example. Last night, we rallied all the way up. Sunday night, we got up to the 29.12 level. We got up there again early this morning on September the 4th. And by the way, those of you that were not around trading in 1929 on September the 3rd, that was the top of the market, folks. September the 3rd, 1929. It was 27 years before that market turned higher. So it was 27 years in a downward market, or sideways at best. But remember, this was a time when there was not really too much in innovations in 1929. Let me see. Gee, there was the radio. That was one thing. Automobiles. That was another thing. Electric lights. That's another thing. Indoor toilets. That's another thing. Folks, this was one of the busiest times for inventions, was during that time. We had 2,000 automobiles in 1930. 1974, we had 3. Okay, let's take a look at a couple other things that we need to watch this morning here, and we'll see what happens with some of these other things as we go through. I wanted to let you see what's happening with the heating oil contract. You can see here last night, the market exploded above that 78% level. That came in at 226, and we actually made a new high, folks. We took out the high of May at 230 and change, and it's still up at that area, but that's really what you're looking at when you're watching some of these things. So that's a big thing. I don't miss those at all, Peak. When I was in school, we didn't have an indoor toilet till I was a sophomore in high school. So what was that, 1936? Anyway, let's move on to a couple other of these markets here that we want to cover. Well, we got a break coming up already. Holy moly, guacamole! Shut the front door and raise the rent. I want to talk a little bit about this Chinese currency when we get back, but we also have to talk about the psychology of trading, and that's something that I really believe very, very strongly in, and we want to cover that when we get back for the break, because we all suffer this. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, I want to get back to you about the taking profits and some stuff like that. But, remember when you put on a trade, folks, two things are going to be very, very apparent. One is you never know whether it's going to work or not. And number two is you never know how much money the market is going to give you. Why in the heck would you want to trade if you're going to have those things looking at your face? The reason why is because you have a probability of a positive expectation of success. That's the probability of the trade winning. These are the patterns that we look for. They lose a lot, but they also win a lot. So remember, when you put the trade on, you don't know how much you're going to make. You never will, so get used to it, okay? That's all you can do. Now, if the market gives you a lot at the very beginning, it's telling you that it wants to give you more, correct? At least that's what I think it is. Now let's talk about fear. I used to, back in 1986, I got to meet, when he was just a kid, Anthony Robbins down in Santa Monica, California, and got interested in neuro-linguistic programming. And coming out of divorce, that was no easy thing to do. But anyway, what we were watching here was how to handle fear. And of course, Tony Robbins, uses the acronym for fear. FEAR is false evidence appearing real, because 95% or even more of your fears are never materialized. So remember that if you have a fear of something, don't worry about it. I have a fear of heights and a fear of close places like, caves and stuff like that. I stay away from those places. So those are, I don't really need that. And yet what I did is I have done bungee jumping off a bridge, and I've also done a tandem jump in a parachute. So I handled those fears easily enough. And believe me, the bungee jump was about 10 times more scary than the tandem jump. Anyway, remember, Mark Douglas talked about the four fears: the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. Now, someone's asked the question is, which of those fears do you think is the most important? And it's the first one, the fear of being wrong. boys and girls, if you're going to be a trader, you flat better get used to being wrong. It's got to be in your DNA. You're going to be wrong a lot. The difference between the neophyte trader and the successful trader with more experience is the successful trader shakes it off, goes on to the next trade. The trader that's the new trader moans about it, complains about it. Why did I do this? Why did I do that? It don't make any difference. Move on to the next one. When you see these guys playing golf here at $30 million, whatever they get made, if they had a bad shot, do they throw their clubs in the water? No, they pull out another club and start to swing again. And that's what you've got to do here. You've got to be able to focus yourself on not how much money you're going to make, but how much money you don't want to lose, and focus on that. You're going to be wrong a lot. The fear of losing money, that's always going to be there, folks. You know, if you're going to put a trade on, you got the possibility of losing. Bottom line, get used to it. Missing out? Absolutely. And the last one, the fear of leaving money on the table, is the most ridiculous one of all. The fear of money leaving on the table, if you translate that, means if you don't get out at the exact high tick of your longs, and if you don't get out of the exact low ticks on your shorts, you are going to leave money on the table. So how silly is that one? So scratch off the fear of leaving money on the table. That's a given. Okay, the fear of missing out, that happens to all of us. You can't be around all the time for all of them. The fear of losing money, absolutely, you're going to have that all the time. Get used to it. It's part of trading. And the fear of being wrong, absolutely get used to it. You know, I hate to get off my soapbox, but by golly, that's it. Yeah, don't forget the boats, baby. You got that right. Boats is number one. Boats is number one. Heights is number two. And, you know, spelunking or caves is another one. I don't even like to watch things on caves in the market. So anyway, let's just move on here to a couple other things that we want to cover here. I hope that. And, you know, the way to get around it, the best way that I found to get around it was I listened to Tony Robbins' tapes, his power tapes, a couple of minutes each day, or read 2 or 3 pages a day of Mark Douglas's book, Trading in the Zone. What that'll do is it will anchor you to realize that those 4 fears are things that you have to accept and do. And if you do those, you're going to be far better off. Do it every day, and it'll anchor, just like you have a neurolinguistic program. You need that anchor that's going to say, I don't really know what's going on here, but I can still do the trade because it looks like a positive expectation. So try to do that. Also, go into, if you like Tony Robbins kind of stuff, which I do, you can go online and get some of his material really easily, but it's really good stuff. It's on NLP. But anyway, we'll just move on to, I hope that helps, because it's really, you know, you put all these charts up, folks. These charts are nice and they're pretty, but that's not what trading is all about. Trading is all about the interpretation of that chart. What do you do after you see it? You know, that's really it. Anybody can do a chart, but you got to be able to have the chutzpah to go in and be able to take a look at it and see what's going on. That's what I'm looking at anyway. We'll see. We'll have to do one thing at a time and go from that level. Now, this is a very, very important day in history, folks. 1998. Does anybody want to remember what happened in 1998? That's going to be coming out pretty soon. 5, 4, 3, 2, 1. Judge's ruling. 1998. Nope. Well, 1998 was long-term capital. No, it was when Google, incorporation of Google. I remember sitting with Larry Page back in those days and saying, you've got a good idea here, and here's what you should do. And the 2 boys listened to what I said, and look what's happened. Isn't that wonderful? And if you believe that, folks, I still have 2 shares of the Brooklyn Bridge for sale. What is really scary is I watched a report over a weekend that showed 2 telephones. One was an Android phone from Google. The other one was an Apple phone. And what they did was they turned the phones off, and in one of the phones they took out the SIM card. And in the next hour and a half, this was in Washington, D.C., in the next hour and a half, the gentleman traveled all over Washington, D.C. for, I believe, 1 hour and a half, covering 14.5 miles. And when they came back, they plugged in the phones, and believe it or not, that phone knew exactly where they were, what they were doing. Yeah, it was on Fox. That's exactly right. I was so shocked. They call that surveillance capitalism. Boys and girls, that was absolutely scary to me. I have a little $25 Walmart phone. I can't even take text messages, which is actually a good thing. But when I saw what that phone did and all the information that was on, I mean, I was literally blown away. And then after I spent about an hour chatting with John Jameson, he laughed and he says, "You don't even know the half of it." He said some of these phones have recording devices that they can hear everything that's going on, even when the phone is turned off, because after you turn it on, it's been saved. I don't know if that's true or not, but that's what he told me, and I have to believe. You know, they have a GPS coordinate in there. They know exactly where you are at any time. So don't take it into the bathroom, folks. You never know who's watching. Okay, let's move on to a couple other things that we need to cover here. And we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've put a chart up here from Laszlo Barini. He's a very, very important statistician, and it basically shows the past financial bubbles. Give me 1 second here, because we have the information going on here that we're having a little sell-off in some of these things, and I want to, the crude oil's dropped about 60 cents a barrel, which is good. And we'll take a look here at some of these other things that we're watching. Hold on one second, but I wanted to talk a little bit about this because I think it's relatively important. If you notice, the number one is the Mississippi bubble. That was a land bubble back in 1718 to 1720. Also, there's a notation here that the tulip bulb mania from the 1600s is not on here because of the lack of data, and there was no really index on tulip bulbs. They didn't have a tulip bulb index to trade. But the most amazing one was Qualcomm between February to December 1999. You'll notice that was one of the big bubbles. That was really surprising to me. I happened to be involved with that one because I had sold Qualcomm into the earnings report that year. It was trading at roughly $490 a share, as I recall. I had 500 shares short. It wasn't for me. It was for the Saudis that I was trading for at the time, and it was the end of the year. It was the second or last day of the year, and I had had a tremendous year because I had been in some beans that had done incredibly well and a few other things. But I was concerned because I had a $50,000 loss depending upon the opening, because it was supposed to open $120 higher that day, mainly because an analyst named Walter Piecyk, who was about 22 or 23 years old at the time, came out and gave it a price tag of $1,000 a share. And here I am in it at $490, and it was due to open at around oh gosh, I can't even remember, around $700 a share. It opened, I believe, around $670 or something like that. And my game plan was, I talked to my handler and I told him where we were and that we were having a problem, and he actually laughed at me and hung up. He called me back later. He says, everybody should have a problem like this. Anyway, what happened was the stock closed up on the day, only up about 30 or 40 points, as I recall. And boy, it never looked back. It was straight down from that point on. So that was one that I remembered. But there's others in here that when you look at some of these, it's very, very interesting because look at the bubbles that are there on the bottom, the ones that don't even make the grade. The stock market things and the silver market. When silver went from $4, to $54 a share. I mean, some of these are just amazing how these bubbles actually work. But I thought it was interesting to go over some of these because nothing ever changes. It's always the same. It's just a matter of they change the names and play the game. But that's pretty much what you're looking at. Now, I wanted to spend just a little bit of time on the Chinese currency and then also Bitcoin. Let's talk about the Chinese currency here just a little bit. This comes from the People's Bank of China, and what it's showing you is what the reserves are for the Chinese exchange. And as you can see, they have been dropping since 2014. At this rate of change, they are going to run out of reserves in about 18 months. Now, this is important to pay attention to because if they run out of reserves, what are they going to do? They're going to walk into the basement and say, turn on the presses, and they're going to make the Chinese renminbi that's around close to 7 now, go back to 12, 14, 16, whatever it takes to get those presses working, and they'll pay off those bills with funny money. So remember, you got to keep an eye on these foreign exchange markets because when they move very dramatically. And we have one that is very, very important right now that we've been following. Let's just get it up here so we can take a quick look at it. This is from Friday. If you'll remember, those of you that get the newsletter, we said pay attention to this level of 115.60. That was a 78% retracement, a 38% retracement, also a 20-minute line, and now we've started to go back below that level, folks. That is not good to the euro. So this means the U.S. dollar index is going to be smoking, and that means it's going to the upside. So pay attention to that one because all of these markets are all about money. And if they start doing these things, they're going to be going up quite a bit. Here's what we were talking about. You'll see here that we were looking for this move to happen here in the U.S. dollar. We're already trading at that level here of 95.60 already, folks. That's just one day. So that's telling you that, something big is happening in these things, so pay attention. That also means with the euro going down, the gold is starting to move lower, and that's another one that we have, really strong interest in because, we have a longer-term projection here in gold where we could be looking at some really interesting price objectives. Let's just get the first one up here. But even more than that, folks, is the fact that the silver has gone down and went below the 1.618 expansion at $4.40 an ounce in the December silver. And if you can get December silver under $4 an ounce, I think at $3.99, I would have to buy that. I just that would be what I would think would be a really good place to take a look. I'm buying silver today, folks, so whether that means anything or not, I don't know. I'm looking at Christmas silver at around 416. If I can buy December silver around 416, I'm just going to buy it and see what happens. Hang on there. Be able to take a look at it. But I will be able to see whether these markets are going to hold these levels or not very, very shortly. So pay attention to them. But they're real key levels, no question about it. Now, let's take a look how the stock market's doing. It's getting down, making those, folks, you don't want to talk to me for a couple months because I'm rather bearish on this thing. Anyway, let's take a look here at some of these other things that we're watching, and we will see if it's going to be happening or not. We're having a little bit of sell-off now in the grains because everything else. And, in fact, there might be deflation coming in some of these things, and that means these grains are going to be going down. Now, we bought December corn right, and we don't want to lose anything in that, so keep your stop at break even, on that, and just watch these, very, very closely. That's for sure. It's interesting here, we're in the midst of a potential hurricane, and we've had crude oil already drop 80 cents in just a matter of an hour. So that's a sign that maybe the hurricane is not going to be a hurricane. Maybe it's only going to be, a tropical storm. So we'll watch that. And if that is going to be, if that's going to be the case. Anyway, let's move on here and talk a little bit about this Canadian dollar, because we had a really interesting pattern here in the Canadian dollar. Went down exactly where it should have, and we had this beautiful retracement. You can see those ABC 135 patterns, and now we're back above. We're hitting above 132 already today, folks. When we went through 131 last night, it was really telegraphing that the Canadian dollar was getting ready to move dramatically, and we've moved 100 pips just last night. This was why the euro and all these were interrelated, because they were moving in context with what the dollar does. And you can see the Canadian dollar was weakening against the U.S. dollar, because this is the way that Henson puts it out. It should be the other way around, but that's neither here nor there. But that's what we're watching. In other words, it's $1.32 for each Canadian dollar versus the U.S. dollar. So we'll watch this as we look at some of these other things. Let's take a little break here. We'll get back and talk just a little bit more about the gold market. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, let's take a look at the gold market here. I've posted it here in the den so you can take a look at it. It looks like we're get down to that level that we've been waiting for. It'll be a beautiful ABCD pattern there, as you can see. And I think, I've got the wrong one in here. Just a second. I don't know what's happened. We have a little technical difficulty, but I am going to correct that in just a little bit. The stock market is getting weaker and weaker, and folks, hang in there because we got a long way to go, boys and girls, a long way to go. Take a look at the gold here, folks. Beautiful ABCD structure coming in here at 1194. We're only $4 away from that. That's going to be our first major ABCD problem. We had a chance for the market to go higher if we would hold that $1,200 level. As you can see, that was very, very important. I marked that in red because once we went below that, that telegraphed that it wanted to get down to that 1193 level. Now, do we know whether 1193 is going to hold or not? No, we don't. And if you look at the price of silver, holy moly, guacamole, I mean, silver has just gotten creamed, as has copper. So, we've got to be really careful in here. We could be looking at some type of a major deflation, possibly. Whether that happens or not, I'm not sure, but let's pay attention to it each day to watching. Those of you that get the 24/7 service, I send out emails and videos each day describing some of these things, so it's helpful to some of them. Others maybe not so much, but take a look at it. Let's take a quick look here at cryptocurrencies, including Bitcoin. I just wanted to show you here, just to show you what this basically looks like here. This is, hold on a second, I want to show you, I've got to get the right title on this. Okay, here's what I want to show you. This comes from my good friend John Jameson because he checks all of the things that are going on in cryptocurrencies, and not just that, but blockchain technology. But this basically shows the number of hits that cryptocurrency received during any particular time. It's it's done on a weekly basis. But as you can notice here, in December of last year, when we hit almost 20,000, 19,000 and change, and it was being listed on the CME, you can see the interest. Now look where we are. There's hardly any interest in blockchains and cryptocurrencies. That's a very, very interesting point, folks, because it is from these levels that you get these turns in the market that make the things look so very, very interesting. So that's it. I am going to have John Jameson on as a guest next week. He's promised me to give me 15 minutes, so he's going to go over to tell you what he sees in cryptocurrencies and blockchains. And folks, listen to what he says because he really knows what he's doing. We'll have him on next week, which will be a lot of fun to take a look at it. But watch the gold here at that 1194. If we close sharply below 1194, that is going to be really, really bearish. That is not going to be a good thing if we do that. Just take a look what's happened to silver now, folks. I want to bring this up here and just to show you that we've come down and made a lower low. We've got as low as 1117, I believe, in silver. So we're down in this zone here, but this is anything, if it gets below $4, boy, that's going to, excuse me, what am I talking about? $4, $14, that's going to be a very interesting, really spot. Excuse my terminology. When I said $4 in silver, I meant $14 in silver. So let's watch that as we go through and look at some of these. We'll check the markets here quickly. We got down to 1288 in the S&P. The sell signal on that was 20 points higher, and it's acting okay. Crude oil is acting okay. The wheat came down. It dropped a little bit below the 78% level. It should have held at 525, but we went a little bit lower than that. So keep an eye on it. But we've got another one that is really interesting that is happening today it affects all of us, and that is the Treasury bond market, boys and girls. Let's take a look at this one here. This is a Gartley pattern. This is an hourly chart on the September bonds. I rolled over to the September. You can see we have a perfect ABCD from 145 down to 143 and change, 143.26. And we're trading 144 right now. That's an ABCD. That's our first one since the bottom back in August, 5 weeks ago. And as Gartley said on page 222, he said, look to buy that first ABCD correction in a new bull market. Now, if you think this is a new bull market or a continuing rally in a bull market, then you want to take a quick look at that because that's going to be one that is going to be very, very interesting. I wanted to bring to your attention one other thing that I think is relatively important. We talked a little bit about it when this show started, and I wanted to bring this up to show you again because this is the gasoline contract, because this is where, we're finishing the key driving season. You can see what happened with the big hurricane last year in August. Look where we are now here starting September. We went up and made a new high from May this morning by just a little bit. We did not go above it by more than about 30 cents. So whether that's a big double top or not, I don't know. But the fact that we were so strong, and once we went above 219 last night, that was telling us that, gasoline was, you didn't want to mess with it, especially with that hurricane coming down the road. Now, when you got up to the double top, why wasn't there any more buying above there? You'd think that it would have been flying through that level, but it hasn't as of yet. But we don't know what's going to happen next, and nobody else does either. And that's the beautiful part of what we're doing it. Remember, we get back to that question that someone asked about the fear of trading. Folks, get used to that. The biggest fear that people have, it's not the fear of dying, it's the fear of public speaking. And some people can, get over that. My grandson, who's 18 years old, is a stand-up comedian, and he is really good. I could put him on TV if I had the wherewithal. Okay, let's move on to a couple other markets that we want to be watching. Let's watch the crude oil here, folks. I want to get up here because crude oil is acting a little differently than we are having in gasoline. We went up to 61% retracement at that 71.14. We got as high as 71.40. We're now trading at 70.60. So all it was able to do was to make a 61% retracement. Now, this is a 4-hour chart, and if you were going to do a head and shoulders pattern from May to July to where we are now, it was perfectly symmetrical. So watch that 71.40 level in crude oil, because if we get 71.40 above October crude, that's going to be a very, very bullish scenario. Until that happens, there's a possibility that we could be looking at this head and shoulders pattern in the crude oil market. Now remember, it is what we call a possibility, never a certainty. That's the whole key, and that's why trading is so much fun, is because you don't know what's going to happen next. That's why every day when you come in, it's something new, it's something different, and it's a fun thing to do for a living, and it takes a while to learn it, but it can be learned, and it's just a little about finding a few patterns that work and moving on from there. Let's double check some of these markets. So we're still breaking down in stocks. We're still breaking down down in crude oil. The euro is still breaking down. This is not good, for the gold, and the gold is trading at 11.99, and we think it can get. It got as low as 11.96, but 11.94 was the number we were looking at. So keep an eye on that one. That's one that looks really, really interesting. So we'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're having a little bouncing around in some of these markets, but we want to keep in mind that there's been some patterns that have completed that look very interesting. If we take a look here at this IWM, you'll notice that it went up to a exact 1.618 retracement. It stayed there for actually 5 days. I don't know what it's doing this morning, but the fact that the rest of the market is selling off a little bit, that could mean something, or maybe it doesn't. It's just a pattern because sometimes they work and sometimes they don't. So just remember that that's what you're looking at when you're watching some of these things. If you remember, we were watching that big ABCD in the S&P. This was the huge one where we had the 382 retracement. That went up to exactly 29 17. The high was 29.1750. We're now trading at 28.87, down well over 30 handles from that high. Now, whether that's going to mean anything or not, I'm not sure. But if we close below 28.84, that is going to be what I would think would be a negative sign. We've already exceeded the retracement that we had at the 382 retracement back in mid-August. So that's another one that you want to pay relatively close attention to. So there's a lot of things happening today. Watch the euro, folks. It's really starting to accelerate to the downside. And if we get that euro below 115, that is going to bring in some red lights in some people's minds. But to us, once we went below 115.60, that was the key level to watch. There was a 382, a 78% level, and a 61% retracement, all coming through at that level. And once it went through that, that was telling us that you most probably are going to go a little bit lower here. That's when we went above that 95.40 in the U.S. dollar index, and all of that could mean something. Maybe it does, maybe it doesn't. So pay attention here. We're going to have a lot of stuff going on, a lot of things happening in the economy with the Kavanaugh, whatever. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.